Hello everybody, we're here today at the Kaplan Business School. I'm joined by Michael Steed, who is the AAT tax guru and accounting technician columnist. Michael, welcome to you. We're going to ask Michael now to stare into his crystal ball and look ahead to the budget this spring. Michael, what do you foresee the Chancellor doing in March?
It's a very difficult question, Ben, to know what the Chancellor has in his mind. Like all Chancellors, he loves the odd rabbit out of the hat on the day, but of course we do know some of the things that are going to happen. A good example of that is the sort of the residue of what I'm loosely going to call the pasty tax, the VAT changes. Most of those took effect on the 1st of October, you know, the hot food and all that, self-storage. But one of them doesn't come into effect until the 6th of April. And that's the one on holiday caravans, where on the large, and just think of a good example, a large static van, we've got a new rate of 5% on that VAT rate for holiday vans where they're not very well insulated, as opposed to the static vans where they're permanent year-round residences, where they've got a very high level of insulation, they're going to remain zero rated. So that's not coming until the 6th of April. We've got changes too, pre-announced, the residence tests. You know, we live very much in a global village. The AAT members will be advising people from all over the world, and I see that regularly on the tax update series, where people are talking to me about advising their clients, you know, literally at all four corners of the world. So the statutory tests of residence, in other words, determining their liabilities to tax, like income tax and capital gains tax, very, very important. And historically, that's all been based upon case law. Now, for the first time in April 2013, that's going to be based more upon the statute, hence the statutory residence test. So we do know about that. We also know that the government is currently consulting on a controlling persons legislation. So if your name is Ed Lester and you're the head of the student loan company and you're being paid through Ed Lester Limited, so you've got your own service company like John Burt from the BBC, he was the Director General but he still had John Burt Limited, those sorts of arrangements are going to be attacked. And so that sort of company there, your own service company, is going to be ditched for tax purposes, and they'll simply pay the money owed to you through PAYE and NIC. So there are things like that that we do know. But we will have a much clearer view of it come the autumn statement because of the 3-month rule. And by that stage, I think we'll know the rough shape of it. So there won't be, because of the introduction of the 3-month rule, there won't be that sort of vast heave, a tsunami of new information just at the budget time. So it is a bit more spread out, it's a little bit more controlled, but of course there will be the odd rabbit out the hat. And let's just hope that he does it in a sort of a less politically inept way than 2012, because 2012 widely regarded as one of the most inept budgets ever.
Right. Michael, thank you.